to expect for the rest of the week. The main thing is I want to talk about firstly is my trade that I took on Euro USD, that I took intraday today. I am still holding a position from up here targeting this low. However, I also took a position intraday here. Now, it is super simple when you have your daily bias. So my bias is simply that I want to trade price lower. This Monday range is where I wanted to target, so Monday low. And we had this SMT at the top here. Now remember the SMT is with GBP USD. Okay. If I show you the GBP USD chart and you see here, this is where we have our SMT, where Wednesday does not take out Tuesday's high. Here we take it out. So I had that SMT and I had a bearish closure. So I'm just trading with the bias, with the narrative, with what price is showing me to the targets. Okay. And if you see here, we have 3 targets. We have hit the first one, the second one kind of didn't get hit, the third one didn't get hit. And if you see today, GU did take out all of 3. So this was the weaker pair, which is obviously showed here, weaker pair. So you could have taken that. I just like to not trade GU as much. I'd rather just trade Euro, even if it's sometimes stronger. I just know things will take time. For me, it's more cleaner and less hectic. Obviously, it depends for everyone. Now, regarding the trade that I took today, it's simple. It is something that I will be sharing in the new MyInvest course as well. Is Monday, you having the sessions. You have Asia session, trade higher, and then you have the London session, create an SMT and displacement lower, and you just trade off of that. And when I'm day trading, you intraday. So I obviously don't expect this target to get hit today, kind of edged it, but I was very certain that this Monday, previous week's low was going to get hit today, so you can just TP there, which is 3.7 RR. Again, if you think it'll go lower, leave partials, whatever, right? Now, here is where you see it. This is where you have your SMT with Asia and London session, again with GBP USD. If you have a look here, here is that SMT right there. Okay, so that's where the SMT is. We have that. And then that's pretty much it, right? So you have this SMT, and I just got on, so pretty much right after I woke up, pretty much at 9 a.m. Shorted after that closure. And why I'm not waiting for a retest of this order block is because my RR will still be good if I just enter. So if I know the price will go down, if I know the RR is going to be good, I will just enter where price is rather than waiting for a retest when my RR would just, increase by, 1.5. But for me, it's not worth it. If I waited, I would have missed the whole move, right? 3.7 RR was more than enough, and that's where I closed the trade. Pretty clean trade. What can you expect for the future days? Now, the thing is that we have here is if you look at DXY, which is also a correlated pair, we have now taken out that same high we're looking for Euro down here. We've taken it out. Now, even though I do expect price to continue lower, let's say we do have this SMT for now. The thing is with this SMT is that this is a low probability SMT because of the narrative that we currently have. You will also see that the lower time frame still does not support price to trade higher or reverse from this SMT. So this is a retracement SMT. And the moment price gives you a reaction of these value gaps, price will trade lower, break that SMT, and take out that low that DXY has, left out, right? Still very bullish. So you need to still be careful to short now. Like even if you are still bearish, even if I'm bearish on Euro USD, you need to understand we are so deep into discount. Sorry, this is the wrong chart. We are so deep in discount of this range, right? If you bring up 50% like this, you realize we are so deep in the range where shorting this deep in discount can come with a risk, right? The probabilities are a lot less than shorting above 50% of this whole range, let's say. So anything above here, which is why you can see my shorts was in premium. And then you also have, your lower time frame ranges, right? So for example, with this short here, you can also see with this range, the risk range, I am shorting, well, the SMT happened in premium and I'm shorting right around the discount. but that's fine because the SMT and stuff formulated in premium. Like what I'm saying is, as long as also your stop loss is in premium, then you are fine, especially when you're like that. But yeah, it's tough now because I think price is at a point where you don't want to short this deep into the range, right? Even if this candle starts, even though we already have now confirmation with that SMT and a CISD, right? Shorting here in Asia, not my cup of tea. But like this, right? To just target this 1.1 to 1.5 is not even worth it. So you'd have to go all the way down here to get decent RRs, which is a 6 RR from here to then, but I don't think this will play out just probability wise. And yeah, you are still shorting a discount. Premium of the small leg, but that doesn't really count. I don't trade Asia, so yeah. What I'm saying is now we just got to be slightly more careful because now we are creating this retracement SMT and we have daily fair value gaps where price can trade into, which I'd be careful of. But the trend is definitely lower, okay? This is beautiful. This is already, we have 1, 2, 3, 4. We've had 4 days of expansion. And you can see we rarely ever have more than 4 days in a row of just clean one-sided directional moves. I'm mainly seeing 3. If we take this out, then I would definitely look for retracement longs back into this range, right, and play the range. That's how I would approach it. The next thing that I would want to look at is, indices, I couldn't really trade today. I wish that we took out this high. If we had an SMT with this high, I would have definitely gone for shorts because it's easy, it's clean. Again, same thing for here. The trend is lower. We now have gaps. Hoping that we can trade into these gaps and then trade lower, which I do think with how everything is going to the world and etc., I think we can hit 21,000, 21,500. This is on futures, so make sure you check the futures chart when you're checking this. Now, the next thing I want to talk about is gold. This is interesting because I had this draw here, and I think I'm slightly changing my bias now because firstly, we look at this previous week's high. Let's look at the weekly time frame. This is a nice reversal. I'm not buying it yet for whatever reason. Let me just change this back to the adjacent so all my drawings are fixed. Thanks to future contracts, the drawings move around. So on the previous contracts, we did take it out, but in reality we didn't, right? So let's actually move away from the futures and see here the normal. Okay, right. So CFDs didn't take it out. So the weeklies, it wasn't taken out here. However, if you look at a correlated pair, which is euro, we have taken it out. Now, taking it out isn't a big thing, right? We need confirmation. Why? Firstly, because Firstly, because this is a reversal candle back into the range. We can push price a lot higher. 50% of this huge previous candle would kind of be my main expectation. So if you draw 50% here, I would expect price, well, this is euro, to hit 414, right? Now, how can we confirm that this might push price lower? At least maybe to 50% of this, or I actually have drawn liquidities here, this high. Now, how can we confirm this? Now, the new Mindvest course, you will know that price for it to reverse, I'm not going to leak all the slides, but for price to reverse, we need 2-stage Kraken correlations. Okay, that's all I'm going to share. I don't want to leak, but yeah, is we want to see if price can confirm a reversal from this previous weekly high. This is our key level, nothing with the SMTs around here. So we firstly mark out the SMTs. Let's also just check the other correlates. So we also taken out here. We've taken out on 2 pairs, not on silver. Okay, so we've taken out on 2 of the gold pairs. And if you then check like this, you will see the SMT right here. Okay, now we have this SMT. We have this SMT now. Now, how do we confirm it? Because now this is a 1-stage. However, you can also see on the daily time frame, they all close as a C2 closure, which means they close back into the previous candle's range. So that is a reversal candle. Okay, it is a 1-stage reversal. So we'll have to go to the 1-hour time frame because it's a time frame on alignment and see if there is confirmation that this high should hold. If there's no confirmation, I would expect this high to get taken out And if it starts to show reversal signatures, it's reversal, and we target these lows, Thursday and Tuesday's low. Okay. Now, if I go here, that's the SMT, the daily alignment time frame. We are gonna go on the 1 hour time frame. Okay. And if you see here on the 1 hour time frame, that price has, firstly, we have a 2-stage SMT at this reversal during London session, like this. You'll see it here, right? We make a lower low and then a higher, or we sweep that out. And if you see here, we firstly sweep it out and then we don't sweep it out, like this. So this is the house SMT, 2-stage SMT on the 1 hour time frame. And you can see it didn't see ISD here. But since this is a weaker pair, we see ISD right away, right? That's your first signature. And then we have again a second CIZ, which is a continuation order block, right? So we have the intraday 2-stage via this daily thing. So do we have a reversal set in place with that 1 stage? Yes. Have all correlated assets, CISD'd? Yes, right? So according to my checklist, which again, I'm not gonna leak all, we have hit all my requirements. Now, the only thing I'm missing now is to frame what the next day can happen. So if you bring up, for example, this indicator here, it will show you you can see this is the daily time frame on the right hand side, and you can see the candle is going to open soon the next day. And what you want to see is 50% of the wick to be respected, right? So if you draw 50% of the daily wick, you expect price to not really trade above 45463. And does that make sense? Yes, because that 45463 is in this series of order block where I expect price to stay in. I do not expect price to take out this high that we formulated at 5 o'clock of 4557. I'm expecting price to now just go into this fair value gap, create confirmation, and then trade lower. Now, if this is my bias for gold, then it's most likely euro will take out my draw even as well today, as the price continues going. If we expect this week to be a bearish week, and you draw your standard deviation tool as well, you can see -2 is here during the Asia of Monday. So this is the current low of the week, which is a nice target to hit. And that's at, 4419. Again, this is CFD prices. And then you have the -4, which is this low, which would be beautiful. Okay. So interesting things to come around. So I do expect this to happen again. You need your invalidations. My invalidation for this setup to not work is that we take out or we disrespect this gap and we kind of go above this like if we see ISD up here, that is when I'm saying, okay, I am wrong. I will no longer stick to my bearish bias until we take out those previous week highs. That will be very easy. You can even then trade to the previous week highs. When you're invalidated, you switch up your idea if price supports it, okay? It is super, super simple when you trade, guys. You just have a plan. You stick to a plan, you know what to look for. When it gets invalidated, you don't marry it. You don't keep trying the same shit. You maybe try twice, but if you're trying again, you need to see a new setup formulate. You cannot just enter because you're still married to your previous bias, right? And if you look on the weekly time frame, you can tell it's difficult because we have this huge bullish wick, right? You would expect price to now really kind of go back into this range, move up another $200, $300 on gold. Would be not surprising. And you can see how I'm not targeting this low. I'm targeting these intra lows because I think if we take them out, then we'll definitely go higher, right? So that's my bias. My bullish bias is already all invalidated from this 4-hour gap. It's been disrespected multiple times. There was a 4-hour 3-stage, it didn't work for today. So I'm definitely thinking that we will go lower to Monday low for tomorrow. The candle will support it as long as we support the wick. So this is the gap. This 1-hour gap with this order block is super high probability. That's where you want to see price reject from. From there, you target Monday low. It's super simple. If there's a confirmation in there, you take it. If there's no confirmation, you don't take it and let it go higher, okay? The war in Middle East and why it's not going to get better anytime soon, okay? Now, the main thing that you need to understand is that price tells the story, okay? You have oil, right? It hit 120 for a split for less than an hour, okay? So the market or your current daily life hasn't been super affected when this move happened because it got retraced super quickly and dumped down. Now, the thing that you have here is that price is now stagnating above this level, right? You had this Trump news here on Monday, which instantly got reverted. Do you not understand what that means? Whatever Trump is saying is straight lies, and the market is starting to realize that whatever he's saying are straight lies, okay? This is what you need to understand. Price has also supported for us to go higher. If you see here, this is my typical, my typical two-stage is what I'm trying to say. This two-stage here, this was the confirmed reversal from last week. Right here, where you have Monday and Wednesday. So we are technically kind of low-key cooked. If I bring this out here, we should hit firstly 107. This is confirmed. 1010 probably. And if we do break out of it, I expect above this high at 121. Okay, that's simple. And price is already trading higher today. Now we are now creeping up where we are staying above the $100 barrel for oil. And this not only affects Middle East, but affects pretty much everywhere else where gas is flying through the roof, where people are not able to afford gas for their cars, where cities are gonna say we need to save energy, need to quarantine, or not quarantine, need to lock down, you need to save energy after 10 p.m. This stuff will happen if we keep going like this, especially in Europe where we can't afford not being able to have the gas from all these other nations that support the European countries for this gas. And unfortunately, that's what's gonna happen. Another thing is the war is not gonna end anytime soon. That's definitely a fact, and it only comes down because Trump got into this war and now he has no way out. The only way out is if Iran gives up. If Iran, they have to give up because number one, how do I say it? So if you look on X, number one, if you see here, they say they have never conducted any negotiations with the United States. So every time Trump was speaking that they're planning for a ceasefire, the markets would pump. And then they would slowly retrace back down because it's not true. And the markets are starting to realize that. So every small pump is getting retraced. So we know that these things are lies. Even if they're saying they are going to make negotiations with Iran, it will never go through because Iran's demands will never be accepted by the United States government. They want full control of the Strait of Hormuz. They want the bases out of the Middle East. This will never happen. The USA will never, never, ever, ever, ever leave the Middle East. This is, at least in your lifetime, this is never going to happen. And you need to understand because they can't. It's not a choice. They have no option. They have to stay there because if they have no control there, then I don't know how to tell you. The oil, people are using the US dollar to purchase oil. Everything when it comes to buying and selling oil is done with the US dollar. So all the nations use the US dollar as the global currency, right? That is standard. The DXY is the dollar, the global currency. Now, if the USA leave Middle East, there is no reason for people to use the US dollar. If everyone dumps their US dollars to the market, it will destroy the USA. They currently have $39 trillion of debt, and that debt is they're pretty much only staying alive because global countries are using their dollars and they're investing back into their economy. That's the only reason they are alive. The moment that stops, the USA will drown in ways that you won't even be able to imagine. So that is why Trump, the USA, stupid move to attack Iran, but they are now stuck in this war until Iran gives up. And God knows when they give up, because somehow it seems like they have huge tons of land. The land is so difficult to capture, the mountains, everything. And we know that the USA are sending so many troops to the Middle East. Do not be surprised if the USA try to do a ground invasion in Iran. I'm not saying it's going to be successful, but if they do it, they'll probably do it to finish whatever they want to finish as soon as possible, okay? If that happens, then Iran will just retaliate to the Gulf countries way harder than they currently are. That's number one. And yeah, the war will not end anytime soon. So, I mean, if you're calm right now, I'm not saying that the Middle East or the Gulf countries aren't safe. They are definitely rather safe in terms of their defense, in terms of everything that Iran's already doing. The success rate, for example, the defensive missiles, they're doing a really good job. But what I'm saying is escalation can definitely happen, and the war will not end anytime soon, and Europe will start to feel it. Like I said, Europe will start to feel it when oil is trading still higher and higher, and it starts to stay above 120. This is when the world will start to actually feel effect, and that's when a lot of people are going to have pain, and everything is going to start to collapse, really, honestly. You can already see Brussels are saying that Europeans should cut back on travel and prevent energy shortages. Like, this is number one, like where the European countries are saying to cut back, right? Less travel, less cars. They might like put like laws where you can't drive at this time, like, save energy at this time. Like, these things will happen if this war stays at its current pace or escalates. And you will be able to tell that via the oil. And oil right now, even if it does retrace back below 100 into this gap, it's just a place for people to buy, and it will go trade higher to 110, 120. That's when shit starts to get like bad. You can already see the Middle East, at least I know in Dubai, they've already, extended the distance learning. They've canceled the IB exams, which are in May, by the way. Um, I mean, there's 1 month left, so I guess. But they've canceled it, even though, when I did IB, technically, at this point of time, you're only revising. So I'm not sure why that is. I think it's just for safety that they don't, like, stay in a hall or whatever. Yeah, the UAE is taking no risks, because, if missile ever falls or anything actually hits one of the schools, even if no one's hurt, or God forbid someone does get hurt, then they will lose their public image of the Switzerland of Middle East, and yeah, things wouldn't be well. So they're not taking any risk. Safety comes first always. So that's really nice. And if you have a look here, and if you see BTC, so we failed this SMT, so let's remove that. The target were spot on. I shorted at 126k, shorted again at 115k, shorted at this move here at 97k, pretty much TP'd 75k, and then just low key in this gap, just randomly closing out because I don't know where to target, just free fall. And then we are stuck now in consolidation, which is expected, consolidation in this gap. And we are in this consolidation now. Now I think we will take out this low again at 59k. And then anything below 59k, to be honest, is a buy signature. And I expect price, okay, this is leaks. I expect price for the next bull run to happen, to go easily to the 150, 160, 180k, around this range. So what I'm saying is you're kind of guaranteed a 3x, well, not guaranteed, not financial advice, obviously, but as an investment, I would be looking for a 3x on your investment on Bitcoin to then start selling and backing off, okay? Okay, I've been in this market for a while. I've been in here. This is the first time, right? I bought in 23, on 20k, 30k, 40k, and I rode it to all-time high, sell some, buy here again, sell. It's just, BTC is honestly super easy to trade once you understand. You have to understand there's cycles, right? Consolidation cycles, expansions, consolidation, expansion, consolidation, reversals, phases of price, again, in the MindVest course that I'm gonna fix up for everyone. So what I'm trying to say here is I expect price to reject from these daily fair value gaps. This was also kind of aligned with NASDAQ in retrospect. If we reverse from these fair value gaps, if we're not stuck in consolidation, which could be possible, If we reject from these fair value gaps, I expect that we go to 59K or at least 62K this low here. Pretty guaranteed this low. Now the thing is, if we do break above here, then all this move was just consolidation. Since we had no SMT at this high, I would believe 79K would get hit, and people would think that it's the low is in, the bull run's coming, and that's where the fake out will happen, and then they will dump to 59K, and that's when I would look to buy. Okay, yeah. Anything below 59K, anything below this low is low key a buy. I would start DCAing at that point, and I would be DCAing anytime it goes lower another 5K, another 10K. If it happens, DCA, guys. When you are investing, you're not trying to catch the bottom. If you try to time the bottom, you will miss on the moves, you'll miss on buying opportunities. Do not time the bottom, because think about the risk to reward, right? If I'm buying at 59K, let's say, if we drop down to 49K, I'm down 70% on my spot investment. Okay, let's just say theoretically that. And let's say the bottom is at 49K. So you're living a maximum drawdown of 70% of your long-term investment, while price, you know that in like 2 to 3 years, let's say it goes to 150K, which is a conservative target, you will, you will 150% your money if you're buying at 59K. And let's say you DCA, let's say your average entry at, is at around 50K, and then you go for the 150,000, you will 3x your money. Okay. Now the thing is also, what's very important is I expect the bear market to end at around Q4, late Q3 of this year. Okay. Probably Q4, because if you look at the high, we've been in this bear market for 175 days. Bear markets usually last around 320 days, 300, almost around a year. Okay, so if we're already 175 days in, if you look where 300, let's say 320 days is, it's in August. Okay, so if we say 350, anyways, it's looking like September/October will be around the bottom for Bitcoin, and that is when I would already be starting to DCA, like I said, below 59K, 50K, 55K. Definitely start to dollar cost average into your investment and wait around 2 years, 2, maybe 3, for it to hit 160, 180K and take your profits. Like I'm saying, this investment, obviously not financial advice, would be a lot better than, buying into your, it will outrun your NASDAQ or S&P 500, which guarantees 10% in 10 years, right? Yeah, so definitely if you have money to spare, I would be looking, personally, that's what I'm going to be doing, is DCing at those times and wait 2 to 3 years and sell at new all-time highs again. Okay, I've been playing these cycles so well every damn time. It's not just luck. Of course, there's some luck into it, but if you're doing it every single time, then it can't just be luck, right? So that's what I would do. Yeah, that's pretty much it. God, I bored everyone with a 30-minute video.